Hey guys, what is up and welcome to a new Tesla update video. So today, let's go over Tesla. Let's go over the market on yet another volatile day with the VIX spiking well into the 50s. Did retrace a little bit, but yeah, more volatility today, but it shouldn't be, too unexpected, at least to the downside, right? I talked about it in yesterday's video and I was telling my members all morning this morning, that we most likely will have best case scenario a sideways action, but at some point retrace to the mean. So I'll go over all that. I'll give you my thoughts on what's next. And yeah, if you enjoyed, don't forget to hit that like button. I'm not a financial advisor. This is not financial advice. And of course, if you want my thoughts as the market is trading and constant updates as the market is trading, mainly on Tesla stock, well, I do have a membership section on YouTube. That link is down below. A lot of updates today. All of these were just today, right? Constantly sharing my thoughts, post updates. Again, mainly Tesla, sometimes other stocks as well. Just $3 a month. Link is below in the description for the YouTube membership. I'd love to have you there. Or $5 a month gives you access to the second tier, which includes the first tier, Tesla plus other stocks, and of course, NVDA updates as well. If you're interested, link is below. And again, all morning we were talking about this mean reversion, which is pretty much exactly what happened. So let's talk about it. So Tesla obviously down over 7% today, down at $252.50 per share. Well, I mean, the QQQ is down another almost 0.5%. So we're just getting days where the market is just casually going up and down 3, 4, 5, sometimes even 10%. Very, very high volatility with the VIX, of course, being pretty elevated still. So that has to die down in order for the market to not only rally, but for the volatility to finally calm down. Tesla's no exception. So yesterday we had that massive pump. And even yesterday, in yesterday's video, I was talking about how this is not sustainable, right? This is not sustainable, mainly because they're just so overextended. I mean, again, you have to understand Tesla, was, from the market bias to the upside was about 13% up, or on the flip side, it was about a 10% decrease to the downside to just reset the mean, to revert to the mean essentially, right? And that's exactly what happened today, right? Now, this could have went many ways. Like I said, you also said in yesterday's video, right? We could have just went sideways and this came up to us slowly, could have met in the middle, or we come down to it. Obviously, we chose to come down to it, but the point is the fact that at some point or another, you would expect price to, well, revert to the mean, right? Which is exactly what it did, almost to perfection. You can't even make this up. And not just Tesla, the whole market. NVIDIA did the same thing. You can see here is going to show up right here. Look at that, beautiful. AMD did the same thing right over here, right? All of them, pretty much every stock did it, right? So these are, very crucial things to pay attention to. Now that that's done, now that we reverted back to the mean, now that Tesla has officially bounced off of there, and it's actually, holding relatively okay, we'll say around 250, the question is, well, what is next? Well, this is what I personally believe will happen, let's say just tomorrow even, and then I'll go over what I think will happen, maybe a month or two later, right? So Tesla's max pain for tomorrow is, of course, going to be $240 per share. This essentially is the maximum pain for the most amount of current options, puts, and calls to be essentially expire worthless in a sense for the most part, right? Where most lose essentially. That's what's called max pain. Most option holders, buyers, I should say, more specifically even, lose. For the most part. Now, I personally don't believe we'll actually go to 240, but usually, as close as they can get it to 240, they try to. My personal belief is this, and this is what I personally think Tesla will do tomorrow. We have PPI in the morning. CPI this morning was pretty all right. I personally believe that Tesla tomorrow will most likely dance around this area. I actually don't think we'll go too crazy. We could have volatility. We could get some sharp spikes up and down, of course. But I personally believe Tesla will close close to 250, actually. That's my current expectation. I think somewhere around 250, like a low 250s, high 240s is what I expect. Now, again, we could get like an up down like this, and we can go back down to the market bias and ultimately kind of, consolidate like this, right? And we could ultimately create like a small little bull flag that looks like this. So we can get a spike tomorrow to like low 260s and then kind of, have a nice little bull trap, come back down, right? And we could kind of start setting up a tight little bull flag heading into next week. That is a possibility. But my current expectation is we kind of hold around this, level for the most part tomorrow. I don't think we'll actually go too crazy out of this range, above or below. That's my current expectation. So let's see how that actually plays out. That's kind of on the 1 hour chart, right? I mean, you have the RSI pretty much right dead smack in the middle. The MACD is pretty much right dead smack in the middle. So there's no crazy oversold or crazy overbought conditions. We reverted back to the mean. Everything is sort of reset, right? The market, and in this case, Tesla has sort of reset, right, to the nice average spots, right? There's nothing concerning one way or the other, in my opinion, in terms of extreme direction extension, I guess you can say. Which, arguably it could be a good thing, right? That's not obviously necessarily a bad thing. So that's that, right? And that's kind of what I expect moving forward into tomorrow. So yeah, the key levels for Tesla still to hold. However, I still want it to continue essentially closing above 250, right? I want to see it closing above 250. That's going to be pretty important because that is a good level to continue holding for Tesla stock. Even if we get these intraday dips below, I do want to overall still continue seeing Tesla close above 250 roughly, right? That would still be a good sign to see moving forward. So those are the main things I'll be looking at for Tesla stock tomorrow. And then now let's talk about, okay, well, let's say something extreme happens. Let's say we fall substantially. Well, the next level to the downside for massive support will be pretty much the mid to low 220s. And to the upside, if we get a massive move to the upside, about 270 will be the main resistance as well. So support and resistance, if we get like a much larger swing, and I'm incorrect about it being slightly contained within this area, 270, low 270 to mid to low 220s as resistance and support respectively. So just, watch for that, right? You never really know. Again, the market is pretty volatile, but that's my current expectation. So let's see how that plays out. But the main thing what we really care about is, well, that's just tomorrow, right? That's just tomorrow. What can we expect in the next few weeks, maybe a month, right? What can we expect from Tesla? That's the main question here, in my opinion, right? Well, I actually think the market still looks I think it looks fine. Now, obviously, we have a lot of inside day candles on the market. I mean, Tesla, like on the daily chart, there's pretty much inside day galore today. I still actually don't think the market looks that bad. I personally am of the belief that the market, after maybe a few more days of whiplash and whatnot, I actually do think the market will break out. I think the market will ultimately head higher. While, after some more chop within this general vicinity, maybe scare some more people, I am of the belief it will go higher, as of right now at least, right? So let's see how that plays out. But if the market does go higher, then that's obviously going to influence Tesla, right? And the question for this is, well, where can Tesla go and what does it need to break to go higher, meaningfully higher, right? So let's talk about that. The first level that will give us an early potential insight that Tesla does want to ultimately move, well beyond where we are right now, like potentially back into the 300s, right? Will be a break of this trend line, right? This trend line that has resisted us here, here, and here, right? 3 areas that we have gotten smacked back down each time, right? So that's good, right? That's the main trend line to watch for. And if let's say it happens sometime tomorrow or Monday, pretty much low 270s, which is why I said it's a major resistance point, because we could come up and get another rejection. But at some point, I expect us to come up to it and finally break it, right? That's kind of my current expectation. So let's see how that plays out. So that's what I'm expecting there. And that's gonna give you an early sign. Now I say the word early sign because yes, breaking out of this would be good, but in my opinion, what really is good and what really is gonna push Tesla to that next level, and my main target will be mid 300s, is 290, right? This will just give us a potential early clue that, hey, that's, this a break of 290 is looking a little bit more likely now, right? We broke above this key trend line resistance, right? That means that there's the chance of breaking 290 and heading, back into the 300s has increased. So that's what I'll be looking at, right? But this will give us that early insight. Now, like I said, 290 is kind of the main level, right? That 290 level up here that we got rejected at many times up here, you can see is the crucial level that we do want to break. This is the crucial level that we want to snap and we want to make our way well above, right? Because that also will line up, of course, with, you can see this over here, right? That'll be pretty crucial to break as well. And of course, what else do we have? Well, we have this red trend line on the daily. Now, like I said, my theory, when we talked about it on the weekly, is that there is potential that the market, after this insane volatility, has essentially a VIX crush, but a VIX crush that isn't from a market rally, more from a market stalling, I guess you can say. That's my current expectation, at least for Tesla. Because like I said, when we talked about this yesterday, when Tesla had this massive rally and it actually finally topped, it had about 6 weeks of sideways action, decent volatility in between, but nonetheless 6 weeks of essentially going sideways in this kind of, 440 down to 370 range. Pretty big range, but a range nonetheless that it was contained with for like 6 weeks. And we're pretty much there. I still expect potentially 1 or 2 more weeks of that, maybe just 1 more week of that sort of contained range price action. But kind of similar to here, and then we kind of, fell back substantially and reverted to the mean on the weekly. I expect something like this, maybe 1 more week of overall sideways action, and then we revert to the mean as well, right? That's my current expectations. But the reason 290 is important is because, again, like I just said on the 1 hour chart, this level has rejected us many times over. And 290 with this red trend line, which also, depending on, when it happens, but if it does happen, let's say sometime next week, also will line up with 290 almost perfectly, right around here, right? So that'll line up very nicely. And then if we get a break above this horizontal resistance of 290, and the trend line resistance of 290, that will be very good news. And I think that's when Tesla will really get to rocket out of here. And I think it'll finally kind of explode a lot of the sort of pressure, if you will, that's building up in this massive consolidation, kind of like the pressure it built up all the way up here, right? A lot of sideways pressure building up. A lot of people thought it'll go up. Instead, it went down and very quickly. Now, I don't know if it'll rally as quickly as we fell over here, but I do expect it to be still a pretty nice, potentially explosive rally. So that's my current expectations, roughly speaking, for Tesla stock to the upside, right? Again, it needs a break of minimum low 270s to start getting a hint of what's to come and getting a better and more confidence that 290 break is next. But ultimately, I still think 290 is the break that is necessary for higher confidence in that actual rally ahead of us. So that's my current expectations. And don't forget, Tesla could still be printing this very large double bottom situation as well, which also lines up with the neckline, essentially, if you will. Is it called a neckline and a double bottom pattern? I don't remember. But essentially, the peak of the W, if you will, right here. That's what you want to break to really get a strong confirmation of this double bottom pattern to work out. And yeah, that's going to be pretty much, like I said, about 290, right? Very important. 290 is, that's like the level. That's the level that really needs to snap for the bulls. So that's pretty much the upside. And like I said, if it does happen, I do believe that going all the way up here to about the mid 300s, maybe even slightly above the mid 300s, will be my target if we snap 290. So that's that. What's next? Also, we have, of course, robotaxis in June, right? We're already like almost halfway into this month of April, right? So maybe sometime in late April to maybe leading into May is when we get that very explosive rally to this range up here, which is essentially going to be a rally into the event of robotaxis, which Tesla likes to do, and that's going to be a pretty hypey one. So that's kind of my current expectations there for Tesla stock. Now let's talk about to the upside. Let's talk about the downside, because it's always good to look at both sides. It's not guaranteed that we rally from here, right? Absolutely not, even though I think it's the more likely outcome. So what's the downside potential, right? What if things don't go well? What if the market continues crashing? Oh, technically a possibility, right? We can't fully discount that. Well, that to me will happen if essentially Tesla essentially starts dropping below 240 / high 230s and starts closing candles below those levels. So it's arguably even below today's low would be already a bit concerning. But those are the levels I'll be looking at to the downside, right? If Tesla essentially loses this range right here again, that will be a little bit concerning. That will most likely make us come back all the way here to the mid to low 220s once again, maybe even slightly peeking our head into the two teens, the high two teens, like we did on these candles here, the very bottom of them. But essentially, if we lose about 220 and start closing candles below 220, like on the 1 hour at least, that would be bearish. That would definitely, remove this potential double bottom pattern. That would be not a good occurrence for the bulls, but a very good occurrence for the bears. And at that point is when I would expect Tesla to ultimately make its way lower and finally make its way down to about that 190, 180-ish range down here for that final low, which ultimately will make a, most likely at least I should say, a bullish divergence on the RSI that will look something like this. And that from there, I think we rally regardless. So to me, it's a matter of a question. Do we just rally from here, or do we have that one more low and then we rally once again? Nobody knows, right? But we have the levels to watch for, right? For early signs of what to potentially is to come. 270, 290, they break first, for instance, there's a good chance the bulls have the upper hand. On the flip side, losing about 220 means that most likely the bears have the slight upper hand here. So again, it really just comes down to which of those levels decides to break first. And that's probably the main way I'm going to be eyeballing it moving